If you're going to do any form of day trading or low time frame trading, you need to understand the importance of timing and find your perfect trading window. So in this video, we're going to talk about the perfect time to trade specific to you. Once you've defined your trading window, you'll be able to take faster trades, catch bigger movements, and have more predictability around the time and the setups that you're going to get, which ultimately is going to result in better trading. So let's get into it in this class. Now, the first thing we need to cover is trading sessions. There are three primary trading sessions: the Asia session, the London session, and the New York session. Now, we're going to talk about the exact best timing soon, because there is ideal times throughout these sessions that have repeatable characteristics you can use in your trading. I'm not going to talk about specific times right now, because the timing and of course the best time for you to trade completely depends on where you are in the world. We're all in different time zones, and depending on where you are, the time will be different, and the best trading time for you is going to be different as well. But to sum it up, the Asia session is daytime in the Asia Pacific region. The London session is daytime in the UK, Europe, and similar time zones, and New York is daytime in the US and similar time zones. And the assets that you trade will also affect which session is going to be best for you, because different currencies move differently during different trading sessions. So the two considerations to think about first of all are, number one, where are you located and what time are you going to be trading? And number two, what assets are you going to trade? So to talk through assets real quick, when we think about major pairs and most minor pairs, so the most commonly traded pairs, these are usually best traded through the London and New York sessions. The list of pairs that trade great through this session are the ones on the screen. I'm not going to read them all out, but also Euro, Swiss franc, and any Swiss franc related pairs are going to be good in this time as well as Norwegian krona and Swedish krona pairs too. Now, these ones here generally will best move during New York session because they're primarily weighted towards Canadian dollar, which has more volume in New York than it does in London, but they will trade fine in London as well. Everything else is going to trade solidly through London and New York session, but they do slow down during the Asia session. So if you're based in Australia, Japan, or anywhere in the Asia Pacific region, these pairs are probably not the best selection for you, except maybe those including the Japanese yen. So if you're in the Asia Pacific area, you probably want to look towards exotics. These are going to be a good choice for you because they hold volume. They actually move more during Asia session. And some of those pairs to look at will be basically anything with Asia Pacific weighted currencies. So AUD JPY, NZD, NZD JPY, GBP JPY, USD JPY, and so on. As I said, these pairs hold volume through Asia session, so you're actually still going to get some movements here, whereas a lot of the pairs like Euro USD will just flatline and do nothing through the majority of Asia sessions. So the first thing you need to do is to determine your location, trading time, and the pairs that you're going to trade. That is step one to choosing your trading window. We've been through how to do that now. So where are you in the world? What time do you plan on trading? This is going to decide the session you trade and also the assets that you trade. And step two is to understand session characteristics, which are repeatable patterns that you will consistently see taking place a lot of days out of the week. And remember, we looked at this before. Well, this is a breakdown of the three trading sessions for the majority of major and minor pairs. So we have Asia consolidation. Generally through the Asia range, major and minor pairs will just move sideways. The London push, which is a drive in one direction as London session opens, and the New York reversal, which is where the market will flip during New York and actually move the other way. Let's go talk about why this happens and show you some examples of it on the chart. Right, we're going to quickly go through the different characteristics. I've drawn out this kind of model here. You should take note of this because this is what the repeated characteristics are going to look like. If you have this in mind, you will pretty much always understand kind of what you need to be working with during your trading sessions. So this here is for major and minor pairs, which is pretty much going to be the focus of this video. The trick is if you're in the Asia Pacific area and you're going to be trading through the Asia session, you need to focus on those NZD, JPY, AUD focused pairs, and you will see more volume during Asia. But the majority of people will be trading through London and New York. I mean, even if you're in Australia, you can trade London session in the evening at around 7 p.m. So you can still trade these characteristics during that time frame as well if you want to trade major and minor pairs. So here's how it works. The major and minor pairs during the Asia session have low volume because during Asia, people in London, people in New York are asleep. The The majority of volume that actually moves the market up and down comes from institutional trading, which means large firms, banks, and institutions with massive amounts of money that are actually creating large movements in the market, because it's market orders, buys and sells, that make the market go up and down. So you need that institutional buying and selling, considering they take up around 95% of the volume, to create the up and down moves. Now, with the majority of the London, New York, US, Europe-based institutional trading inactive during the Asia session, it creates a phase where pretty much the major and minor pairs, anything focused on Euro, UK, US, Canadian dollar focused currencies, they just move sideways. They don't do much. Now, this is what we call a consolidation, just a phase where the market isn't going up or down. And basically, during Asia, it's just going to be a bad time to trade the majority of those pairs. Now, we can use the Asia consolidation for something we call sweeps, and we'll talk about that as we get into London. So around the open of London session, early in the morning in the UK, we are going to see a drive of momentum on most days. This is where the significant movement is going to be for UK-based day traders if you want to trade the London session. Because we see this large open of volume, which is essentially when UK and Europe-based institutional traders start placing orders or start messing with their orders, we are going to see a large drive in one direction or the other. So the ideal thing to do here, and this is a good thing about finding your trading window, if you are going to day trade London session, you want to be active around London open, because your goal will be to catch the large movement at the start. If you can get active in the market here, you're going to be able to run the market down throughout the high momentum move, okay? Now, the London push also usually, or quite often, does something we call a sweep. Now, as you can see, the Asia consolidation will pretty much create a sideways range. We'll take a look at this on a chart in just 1 second, which means you're going to create what we call liquidity at the high and the low. Liquidity simply refers to orders. Basically, if we create a range of highs and lows, we're going to have sell orders and buy orders above and below the market. Okay, above and below the highs and lows in the market, or above and below the Asia range, we call it. These orders are then often going to be swept both sides. Now, this doesn't happen every day, but it happens relatively often, as you're going to see in a minute. Often enough for it to be a repeated characteristic that's worth mentioning here. With this in mind, you would basically consider the Asia range as a target for trades or a target for entries. So if the market was to sweep above the Asia range, this would be a good opportunity for you to then start looking for trades to go the other way, to take out the liquidity under the Asia consolidation. So understanding that sweep is very valuable. Now, another thing would be if the market is here and it hasn't yet swept the high, but it's on the way to doing so, you'd be able to avoid losses by simply not entering trades at that point. Because if you enter a trade on the way into the highs of Asia, for example, you are probably going to get stopped out because the sweep is relatively likely to happen. It's going to happen enough of the time that you selling inside of the Asia range instead of above, or buying inside of the Asia range instead of below, is going to be a little bit of a lower probability thing to do. So understanding the Asia consolidation and the reaction there in London in terms of sweeps is very valuable, because you can obviously wait for the sweep to occur, wait for the high or the low of the Asia session to go before looking for your entries to your trades. Two things to consider then from the London session. It's very often going to sweep the high and low of Asia, and it's also very often going to create a nice higher momentum move with clearer direction and less of this sideways mess that we get during Asia. As we move into New York, so coming into the start of New York session, which in the UK is going to be around midday, 12, 1, 2 p.m.-ish, is the crossover time where we see this characteristic of the New York reversal. Now, sometimes the New York reversal is actually going to be extended as a kind of New York continuation. So if we have this as our Asia range, and then we have our London push here, sometimes New York could actually just follow through as a second continuation, okay? But enough of the time for it to be a repeated characteristic, it will create reversal instead. So the reason the New York reversal occurs is obviously now we have the New York, US, and Canada-based traders and institutions activating orders and getting involved in the market. This creates a big new drive of momentum, which can, of course, go with the direction of London, but quite often will go against the direction of London as London-based institutional traders wind down and New York kicks in with a whole new run of momentum. So a good way to trade New York is around New York Open. You can start to identify changes in the structural direction of the market. So if we were to see the London trend reversed, if we had a downtrend in London, for example, and it started to break higher into higher highs during the open of New York, we could then look for pullback opportunities to provide buys for us so that we could take this market higher, right? That is how you would generally then trade the New York reversal. Now, of course, if New York didn't make new highs, we could instead look at this as a way to just continue taking the market lower, okay, as a kind of New York continuation. But enough of the time we are going to see that New York reversal taking place for it to be considered as a, meaningful characteristic, okay? So as we come to the end of the New York session, whether it's been a reversal or a continuation, we're going to see the market slow down, which is basically where we start to lead back into the Asia consolidation. So this is like an endless cycle. Asia consolidation, London push, New York reversal, slow down. And then we go into Asia consolidation, London push, New York reversal, and then slow down, okay? So that's the general characteristics of the market. And that is how you are going to be trading them and choosing your best time window. So talking about the trading time windows then, if you are in London, you really want to be around the open of London session. You generally would want to see sweeps of the Asia high or low. If you want to trade New York session, you will be looking to the open of New York, the crossover time between London and New York session. And for the majority of cases, you're probably going to be looking for reversal trades, though you would generally just want to continue moving with whatever the existing trend is. If it doesn't break, keep taking it lower. You may get that kind of New York continuation. So with that said, that's the diagram. Let's go look at this on real charts. All right, so we're looking at the real charts now. We're on Euro USD on the 15-minute time frame. The characteristics we're looking at are going to be most relevant on Euro USD and other major pairs. And if you look at around the 15-minute time frame, you're going to have a good view as to the day's price action, so you can get used to these characteristics. The indicator that I'm using here is FXN Asian session range. This is going to draw these shadows on the chart, which color in the high volume times for each of the different sessions. So we're going to go through and talk over the characteristics that we just discussed in the diagram. The first is going to be the Asia consolidation. You can see through Asia session and leading into Asia session, as we said, volume is low. The market, if averaged out, is going for the most part sideways, okay? So we're not really making too much movement one way or the other. The range is small and there's not going to be really any trading opportunities directly through Asia session. But what we do here is we create liquidity beneath here and above the Asia range. Now, as I said with the characteristics of London, one of the first things you're going to see will be sweeps. So we have a sweep of the Asia low, and then as you can see directly into London open, we get that push of volume. So looking to execute your trades around the open of London, and specifically, especially for the highest probability, once the lows of the Asia range or the highs of the Asia range have been taken. If you line your trade up with a sweep of Asia high or low and the London open, you're going to be able to catch the high volume. So looking in this area, using your low time frame confirmations and entry models will be the best point that you could get into the trade. That's going to lead into London push. And then as you can see, we have a little bit of an interesting day today because after the London push, we slow down and reverse. But then we get that New York reversal where the market picks up its momentum and pushes back to the upside. Now, a lot of times the volume in New York is going to be a bit bigger than the volume in London. That's not to say that London is a bad session to trade, but we just have still some London, UK, Europe based momentum running into New York. And then we also get US, Canada, and other momentum in that time zone as well kicking in. So you can see here, opportunities wise, sweep of London, London momentum, that's opportunity one. And then into the open of New York, seeing these structural shifts can lead you into that new opportunity to run the market higher following that New York volume. Now, as I say, these are repeated characteristics. They're not perfect every day, but they are going to follow through with the same format. So this day, for example, had a smaller London range. We didn't really do too much in London. We still got the Asia range, but we didn't sweep the high in this instance. London would probably be just a day of flat trading, to be honest, because there really wasn't much to work with here. But we still do get that nice push of volume into New York. And just after the New York Open, we do start to see reversal against the initial momentum of, the rest of the day. Although not the perfect day, still a good solid understanding that the Asia range and the New York momentum would have been tradable there. So this is a nice simple day that follows all of the formats we'd want to see. We have Asia consolidation here. The market then pushes beneath the Asia range. We get the sweep. Looking then at the structure, when we start to shift, this area here would be solid to get into a trade as we drive into the London momentum. We have the sweep characteristic and the pickup of momentum immediately after the sweep. So this would be a solid day of trading through the London push. Now, as you can see, as soon as London starts to slow down and New York session begins, we see that New York reversal coming in. So this day, characteristics followed pretty much perfectly. And again, as we've covered multiple times, and I think we'll see this on previous days as well, solid understanding when New York starts to slow down. So we're coming to about 5 p.m. UK time, the market will generally flatline. So leading into Asia, whole lot of nothing. This next day as well, end of New York, when the session starts to close up, leading into Asia, we get once again a whole lot of pretty much nothing. Following on then characteristics today, Asia consolidation. We get that London sweep and push. So sweep of liquidity, push of momentum. That's a perfect setup for a trade. Slow pullback down. And then this one was a bit of a New York continuation. So you can see the trend didn't really shift here. So rather than looking to sell into that, you would just ideally want to line your trades up with the open of New York to take the market higher. Okay. Again, very clean one here. Asia, sweep of Asia, London push, reverse, New York reversal into there. Okay. New York's a bit slower, but we still get solid footing and then a push higher. And then into the end of New York, we start to flatline, ready for the next day. So these characteristics continually repeat, all right? This one, London, driving down quite a lot. So we still get that London push momentum. We don't have Asia sweeps today, but we do then lead into a nice push of momentum again in New York. So a little bit of a messier one in terms of the characteristics, but the important thing to note from all of these, even the ones that don't fit perfectly into the alignment of the characteristics, is we do get that drive of volume at the start of London, that drive of volume at the start of New York. So if you are setting up your trades, your entry points realistically as a day trader will want to be in and around the open points of these sessions. Okay, again, this one, not so good, but still London Open, New York Open, solid places to be getting into trades. Okay. So we saw there probably around 60% of the characteristic days worked out. The others were not perfect, but they still provided the London and New York momentum that we like to see. So the important thing to remember here is, as with everything in trading, this is probabilities based. You're not always going to get the perfect characteristics, but understanding repeated patterns will allow you to find opportunities in line with the momentum and the best timings to be executing trades. All right, so we're going to look at trading these characteristics from the perspective of a London session trader. The first thing we want to do is get clear with our Asia range. We see the Asia consolidation has taken place this day. We have the high and the low. We want to mark those out so we're clear with the range we're working with. As we know, the characteristic we focus on with Asia is sweeps. So we like to see the market take out the high and the low of this range. It's not going to happen every day, but it happens very often enough to turn it into tradable opportunities. So we have our high and our low of the Asia range marked, and we can see that the market has taken out the high at this point in time. What that's actually done is fill into this area of supply. So this is basically what was previously a demand zone, but because we gapped down so far, we created a gap. What generally happens is when the gap is filled, so this space here, that's going to be where reversals are most likely to take place. So if we were to see something for reversal here, we could look for an opportunity to sell. As we've seen the high of the range swept, but the low of the range hasn't been swept yet, we could then potentially look to take the market down towards the low, and then of course lower in line with any larger trend, okay? So what we would want to see now would be some form of reversal indication to get us into a position. We can see that we've created this range, the market's pushed up, created this high, and then pushed down and taken out the low. So what we've actually done here is create a new supply zone, which is this indecision candle, that we could then look to sell from. So with this supply in mind, you could then place an order like this to basically sell into this sweep now that we've confirmed a change in that trend and look to take the market down first of all towards the Asia low and then second of all to wherever else you might want to take it in the existing trend. So with this big drive down, we've seen a clear break of structure. We could look for imbalanced demand areas. There's one just here. It's going to be that zone just there. That's pretty much the next imbalance. As we can see, there isn't really much going through to that point. So that would be a decent target for us to look for on a trade like this. So what we've got is Asia sweep, and then we've found our reasoning to sell into the Open of London. Now, if a trade can correlate with the Open of London session, you are generally going to be in for a pretty strong, fast move. And seeing as we've swept liquidity, traded into a key area of supply in what is looking like the start of a new, at least on these timeframes, downtrending move with this large break of structure down here, created by the gap, we have everything we need essentially to sell into this now. So we can enter there, stop above the high, and then our target, we've just gone for a simple demand zone target. So if we allow the market to play forward a little bit, we see just there we get a tag in, and then the market goes, takes out the low, and then continues down towards the target that we've been looking for, okay? So that would be how you would trade using other concepts like supply and the bigger picture trend, shifting from bullish here to bearish, and then factor in the liquidity around the Asia high, and also factor the timing of looking to get into trades at the London Open. All right, you can see the London Open is just here. That's where the real momentum picked up. So getting in just before that momentum spins into the market allows you to catch a very fast trade in this instance. Now you would then, if you were holding the trade for longer, in this case we weren't, but let's just say we were. If you were holding the trade through for longer, you would then generally want to run this trade towards, realistically, the end of London session, because then you have the idea that we may start to see that reversal coming in. So here we run this trade all the way through to the end of London. That would be where your trade would generally be closed then. It's going to be that candle there. That's the final candle in London session. And then from there, this is where New York reversal is most likely to start taking place, okay? So what you could do in this instance is if there was reason for reversal, look for an opportunity to start buying into a New York reversal. As you can see through New York session, we actually see a drive to the upside. Now, on this specific day, I don't see any trades that would have been taken by me in this price action, but maybe you do, okay? We all trade different ways. These characteristics can be brought into pretty much any style of trading that you use. Now, the New York reversal, of course, took place as soon as London closed. We started to move to the upside, and we moved higher through all of New York until, of course, it starts to slow down. At this point, we are about to lead into making a new Asia range, and for the most part, this is just going to be the end of day trading for most people, while the market consolidates, ready for the next day's price action. But that's an indication as to how you would trade the characteristics. We have number one, the Asia session. This is always going to be range, sweep. Those are the things we're looking for here. Number two, London Open. We factored a trade using higher time frame trend structure or the bigger picture trend structure, a fill of a gap, test of supply, and then a reversal on this lower time frame to position a trade just ahead of London session. And then as London kicks in, new momentum flows into the market. Of course, we looked at an earlier exit, but if you were holding the trade through, the closing time is going to be around the end of London. You can see as well, the actual end of London session there was literally the entire bottom for the day. That was the lowest price of the day. Okay. Then as soon as that came in, we started to see bigger drives to the upside. Now, of course, these are not the open and close times of the session, but these are the high volume times of each session as we've covered so far. And then from the end of London, we did nothing but go up, indicating that New York reversal. So if you are a trader in the UK or Europe, the best time for you to trade will be to angle trades around the London Open, preferably with an Asia sweep involved. So once the market has taken liquidity above or below the Asia range, selling down or buying up through into the London momentum is going to be the ideal trade. Your goal here is to aim to catch the London push, and this generally is going to be a trading range of between 7 AM to 12 PM UK time. Now, you can also, or alternatively, trade the New York Open if you're based in the UK or Europe. This is going to be around midday, so 1 PM to 5 PM UK time. It's going to be a good time to catch that New York momentum. This is also going to be the ideal time to trade for you if you're based in the US or a time zone similar to that, as this will be the early morning for you over in that time zone and will allow you to catch that movement of a reversal or sometimes a continuation. Now, if you plan on trading the London or New York sessions, the best assets for you to focus on, in my opinion, are the major pairs. So some like this. You could trade some variations of these, but these are super solid pairs to trade during these sessions. And a final note to remember is that volume will die out on these assets after New York session. So around 5 p.m. UK time, or when you're coming to the end of the high volume part of the New York session, it's then best to either exit trades or at least limit the risk. So put stops to break even, move them into profit, and then simply avoid taking new trades until the next day. Now, if you're based in the Asia Pacific time zone, London Open can also be traded, as this will be in the evening in the majority of countries in that time zone. But if you want to trade the daytime, just simply avoid London New York session and make sure that you're focusing on assets relevant to the time zone and the area that you're in. Exotic pairs will move better during Asia session. Here's an example of AUD-JPY. You can see the Asia sessions marked in blue create considerably larger movements than the London and New York sessions do. So you can still trade just fine and catch that momentum using opens of different sessions. But for Asia, you want to focus on currencies like the Australian dollar, New Zealand dollar, and the yen. So to round it up, choosing your window to find your individual perfect trading time, you should focus on where you are located in the world, what assets you are going to trade, and what time of day you will be trading. When you've collected all the information on these things and you've put all of this together, you can focus on catching momentum around session opens, whether that's Asia, London, or New York, using the characteristics I've taught you today. And that will put everything you need together. Now that we've talked about timing, we need to talk about system. These are some of the results my system got last year, and these are results of the students that I teach, that I get through to me pretty much every single day. Now I show you all of that so you know I'm worth listening to and you know that I can help you. I have a free trading course called 7 Steps to Profitable Trades, which is going to help you to build a trading system, simplify your trading, improve your individual trades, and ultimately help you to find success. There is a link to this at the top of the description, and this is going to change your trading for the better. I recommend you sign up to that. It's completely free. And if you don't want to do that, check this video out next. We'll go a little bit deeper into some of the concepts you can use to build out your day trading system. So thank you for watching. I'll see you in the next video.